Welcome to the Investor Impact Power Talks with Vinney Chopra, where investors gather to share their insights and strategies in the world of multifamily, real estate, and beyond. Get ready to be inspired and equipped for your next level of success.
Welcome. I'm so excited. Ankur is here. David is here. Brother Daryl is here. Brother Franco is here from Orange County, Los Angeles. I really want to I don't know, he should show up. I see something else. Franco, you want to show your face?
It's me. I'm driving. Hi.
Yeah, gotcha.
Sorry, I'm
Gotcha.
driving and I don't have anything
No
to hold the
worries.
phone.
No worries. Oh, no. Thank you for joining. Actually, Franco, I've known him for many years, and he's been helping my lots of friends in residential loans. He got our home for this home 2.5% fixed. I can't believe it. 2.5. Now interest rates are so high. And for our rental, 2.75. He worked so hard. Just, I want to say that because, see, our taxes are not that easy because we get depreciations and we get negatives and it's so hard. But one thing I really appreciated, Franco, was he didn't give up. Franco, I'm just telling you about you, man, because you didn't give up and you were able to take every LLC and put back the cash flows and the depreciation, which is negative, back into it for the underwriter to look at. And that really helped us a lot to be able to get the loans approved and everything. So it really means a lot. It took us 6 months to get the loans, both the loans, but that was a wonderful thing you did last year. We locked it in. Hey, brother Stephen is here. How are you, brother? All right. I'm very excited as it's been a great day talking to a lot of people, everything, wrapping up things. And then I'll be leaving, my wife and I leave on Friday for Patagonia, Chile, and Argentina. So that'll be nice. But let's talk about wins. You know, what's happening? Brother Dave, yeah. You want to share?
Sure. I have several companies that I'm getting ready to buy. And I say several. One is they manufacture it, and I'm looking at, of course, real estate. So I connected with an investor today who is looking to buy industrial warehouse. And she said, I have about 30 million that I'd like to invest. She's been investing in other people's syndications in apartments, and those deals aren't going very well right now.
No, they're not. No.
So
Yeah.
she said, and we talked about, I said, they call it flex space, but flex space is really hot right now and will be hot because it's triple net lease. It's a box, but there's two really important keys. One, the people you rent to, they make their living from the box.
Yes.
So
yes.
If they were renting an apartment from you, they don't make their living there. But when they're renting your commercial space, so that's number one. So they make their living there. And number two is they pay all the maintenance and expenses.
Yes, triple net. Triple net.
So
Triple net.
I really like that asset class. We're in Bonifay, Florida. We're going to build a 15-unit one. I've had that under contract for a while. We're just dealing with permits and Vinny, which is so much Florida.
Lots of fun.
So much fun to try to build just the retention pond. Like all of our numbers were spot on. And then the Department of Transportation came back and said, you have to manage the water. And because you have to manage the water so it doesn't run into our ditch that we built for you, you can't run the water and then you have to run it to a pond. That's going to increase the cost of the project by almost $290,000, which is a huge increase. But so the positives are I found a nice investor today. And I have a couple of businesses that I'm really close on. One is they manufacture metal railings, spiral staircases, gates for the front entrances. They do about 9 million a year right now, and they're very profitable. They do it, but when I compare that investment to real estate, the returns on that investment are
huge.
Well, they're in the 45% range.
Oh
So
my God, it's me.
yeah,
45%.
and see, that's the
Yes.
thing that comes with business is that when you buy real estate, you're still buying a business. If unless you're buying a single family or small multifamily, but you're buying a
Yes.
business. When you buy a business that is up and running and you have an owner that's ready to retire and the business is running well and they have these earnings in place, I've been finding that is really it's gotten really appealing to me. I joined another mastermind and I'm close on a couple right now. So when I say a couple,
I'm so happy. I mean, we need to pivot. We really do. We were thinking the properties will go down in value. They may, right? People will be retiring, but the numbers with the interest rates where we are right now, and Fed is thinking not to cut them. Oh my gosh, that was the news to me today. Look at where market went today. 300 some points down, both NASDAQ as well as the Dow. So I think this whole election year, everything, the jitters, the loans coming due, we are looking for some big fall here. No, thank you.
okay,
Yeah.
but I'm gonna play the anarchist here. We've been
Yeah.
saying that we're expecting prices to drop for 2 straight years. And why are they not dropping? I think because the government is still printing money. So I don't see prices dropping. I don't see rents dropping, although IRR came out with a report that rents had leveled, but then it looks like the first quarter report is going to show them bumping back up again. And if prices don't drop and rents don't drop, we just have to absorb what's going on because people are still going to buy. There's still income to be made in multifamily, but it is why I really like the warehouse. I say warehouse flex space market. We talked about even after COVID about self-storage, Vinny. You remember we bought the course and
But the course, yeah.
but that being said, with the flex space, the average you get 1,500 square feet. They rent for $1,500 to $2,500 per box, and you got no maintenance and tenants that pay on time. So I think that's a market as we pivot. For me, there's like in Jacksonville, just millions of square feet of this warehousing going up. So I don't think Jacksonville's my market for this type of asset, but some of the
You
tertiary
said some
markets.
city's name, Boniface or
Well,
something?
Boniface is just outside of Pensacola. It's 20 minutes outside of Pensacola, which
That's what I was gonna say, because about 5 months back, I went through the Panhandle with my buddies, and we went from all the way from St. George Island side, all the way through Pensacola and Biloxi, Panama City and all. So that's where I remember. And it's growing crazy.
like
It's growing over
crazy.
there.
All
It's
of
amazing.
Atlanta and what's the Birmingham
Miss Alabama.
are
Yep.
moving into the Panhandle and taking over. Like you see nothing but Georgia plates. If you go to the Panhandle, nothing but Georgia plates. License
So
plate.
true.
I mean,
So
Georgia
true, so true.
has come up so crazy, and I think it's been now 7 years for me since I moved out of Georgia. And obviously, I'm in Washington, opposite side of the country. There, Atlanta, they were building something called as a Beltline, and that was circling the entire city. And anything that was close to that Beltline has been just phenomenal. And it's
Smyrna. Look at that. Silver Spring or whatever. Then I bought in
Sandy Spring.
Austell for 10, Sandy Springs.
Yes.
I bought in Austell, 10 million one, sold for 15 million six. Then bought 12 million two or one in Austell, Georgia. No, Union City, Georgia, sold it for 19.6. It's amazing. Brother Daryl was with me in that investment. So we made hay. Robert Pereira is still having amazing returns over there. One of my students, Robert from Newport Beach. But no, that's so great. You're right. Panhandle is here to stay. And even Santorini is there. There is one place there, maybe Dave, it's like beautiful homes, $1 million to $10 million homes on the water in the Panhandle.
Santa Rosa Beach. Santa Rosa.
Yeah, that's the one. Okay, yeah.
It's the only beach in the state of Florida where the residents own the sand.
Yes.
The only place in the state of Florida. And there's a lot of people who are bothered by it. Like they'll walk on the sand beach and the residents, they'll call the cops. But yeah, Santa Rosa, I've been there several times. It is great. They've got great golf courses. It is very affluent. And the condos there are crazy. 20, 28 stories on
Yes.
just gorgeous area. Yeah.
Very beautiful. All
Ankur,
right, Ankur, tell us, brother, some wins and what's happening.
No, awesome. Like I'm right there with David on the whole business buying thing, right? And we've been like in parallel while we are waiting on multifamily. And I want to touch upon that really interesting point I'll bring up on that multifamily too. But we've been looking at like businesses too. And I've been right around there looking at like manufacturing as well as like tech, even like SaaS companies and all of those. A lot of good
Hold
learning.
on, SaaS companies, you piqued my interest.
Yeah,
Actually,
a lot of
today
good
I
learning
did
there.
is
So we are
wow.
multi-threading into learning about business too and looking at all of that area. Obviously, valuation and all that is a little bit different and all that, but areas which may also make sense. And I wanted to pivot back, Vinny, to that point which we were saying of like the prices not dropping. And I always looked at myself or in one of the two band camps, right? Warren Buffett style of thinking, or if you're the style of thinking, if you're going to look at the economy, or if you're going to look at what's getting now. And the style of thinking I like is doesn't matter what's going to happen 2 years into the future. We don't know, of course, but we know how is this asset or how is this business priced right now? And does it make sense to get it right now? And are you getting in right, basically? And do you have that margin of safety? And as you have taught too, like the same things are applicable to both real estate as well as for business. As long as you're keeping that
sure
margin of
are.
safety, you will be safe. And Vinny, in your whole thing, margin of safety has been that 8% holy grail of the cash on cash return.
Surely, totally. 8 to 10 even. And gosh, I'm getting into Airbnb business, just to let you all know. One of my student, personal coaching student, made 45% cash on cash. 45%. So I said, buy that 4-bedroom home. I'm coming with you on that. That's near Chicago too. Brother Daryl, right there. I did a 2-hour recording with him, and he knew each city in the Northwest, nice area of Chicago, where it's applicable, where the laws are wrong and this and that. They just did 2 homes last year and huge returns. And it was mind-boggling. If I find their website, I'll show you today. Anyway, the thing is, us business people, entrepreneurs, we need to just pivot and look for cash flowing businesses. That's all it is to it. You know, the fund we are doing, strategic income fund, I wouldn't be on the real estate. I would not be on $40 million loan, but I'll be able to control with my partner Sapan $40 million deals and $70 million deals, because we'll be right behind the senior debt. So again, it's pivoting the business. It's pivoting what's right, what's the timing. Yeah. No. Brother Stephen, and then Brother Daryl. Brother Daryl, please tell us you first. Yeah.
Sure. I actually have been corresponding and communicating with Carol because Carol's pretty busy nowadays.
Yeah.
And she's dug up a bunch of properties that are in foreclosure.
Oh,
And she wants us to play ball with some of these brokers. I've been out of it for the last week because my daughter from Atlanta was in town and just showing her around and having a great time for the last week.
Sure.
But Carol and I are supposed to be looking at, I don't know if you've heard of this before, Vinny, called Cal Homes. Have you ever heard of Cal Homes before?
I think I've read about them. Yeah.
So she's
they
interested in that.
foreclosures.
They're foreclosures. A lot of them are foreclosures, and she sees there's some opportunities because that's where she's got her first start in real estate with foreclosures, and so she feels comfortable with that. And so we're going to take a look, talk to these brokers and see what they've got. And then secondly, she's got a property that's not too far from where she lives. She lives over in El Cerrito.
Yes.
And so she's looking at this property. I say property, it's actually land itself. And she wants to talk about this as a possibility for building something on. So we'll sit down and take a look. We'll go visit these brokers and see what we can get done. So that's a double win for this week.
I love it. I love it. And we just talked about Airbnb and El Cerrito, whole Bay Area where
Mhm.
you are, I am.
Mhm.
We could be doing this Airbnb right here. I don't know the restrictions in that
Mhm.
city, but you might like to find out. I'm
Yeah.
just so pumped up because one of my other good friend, Eric Lawson, and he came on my podcast. I interviewed him yesterday. He's got $330,000 business. He works only 2 hours a week.
Ah.
Six Airbnbs. And
Wow.
I recorded him, and it's going to come out here open pretty quickly. So the key thing is, again, it's finding a good home, 3 bedroom, 4 bedroom, or 2 bedroom, in where the tourism is, or
Mhm.
near to university or near to hospitals or things like that. So that single family can bring money as if it's a multi-family because
It
it's a
just-
hotel.
Yeah, it just has to be in, like you said, in a tourist area, because
Yes.
what has happened, like Airbnb stock is, if you looked at their stock, it is just getting destroyed. Why?
Destroyed.
Because
Yeah.
first of all, the whole concept behind Airbnb was I can go and stay in a home, have all the amenities of a home at the price of a hotel, and have the comfort of a hotel. What happened over time was, all right, you pay a cleaning fee, $200 cleaning fee when you leave. But they tell you, you got to strip your sheets, you got to take your garbage out, you got to, why am I paying a cleaning fee? So people are fed up with Airbnb, which is why the hotel market is coming back stronger than ever, which you're in the hotel market. However, if you're in the I call it resort stay.
Resorts.
If you are a mountain cabin, great. If you're near the Great Lakes, like in Chicago, you're near the Miracle Mile, or you're in
That's right, yes.
Milwaukee. If you're in the
Mhm.
right spot, an Airbnb that would normally rent a house that might normally rent for $3,000 a month on Airbnb can go for $16,000 a month.
Mm.
5 times.
But it's very dangerous. If you just buying the everyday stuff, I say it's very dangerous. There are people who are losing money hand over fist because they were just buying any house
Yeah.
and
Any
would go on Airbnb. The guy you're working with seems, or person you're working with seems to
Yeah.
know what they're doing because they're buying in the resort type.
There's
And he
another thing I
bought
want
like
to.
a.
Oh, sorry.
No, please go ahead. No, go ahead. What
Sorry.
I was going to say was this house he showed me before and after, I could not believe. It was like no sheetrock, no nothing, just bare ceiling. I said, what? And then he showed me the picture of Airbnb. I couldn't believe because he's been renovating homes. And now he's figured how to really do this side of it or what like that. No, go ahead.
No, I
Yeah.
was just going to say the other side. So another part of Airbnb, what I've noticed is, and because I try to investigate that also, another side is there are areas which are popular areas also get very competitive, because what I'm realized, for example, there was a time when, for example, Phoenix, Arizona, okay, there was a time when it was like only few people are doing it. Now, I know myself, like
So
at
much
least,
competition.
yeah, it is crazy. And in fact, one of my good friends of mine also did an Airbnb in the Phoenix area. And what has been happening since they've done, and so in Airbnb, another thing is, and we'll do the underwriting too, Vinny, but you'll know this, like you're having the income and expenses, but you might be getting 3 times, 4 times more, but you have a average occupancy of a home.
Yes.
And
Yes.
you can look at that. There is a website, I think it's
Air
AirDNA.
DNA.
You
Yeah.
can look
Air
at average
DNA.
occupancy in
Mhm.
every place. And what you'll realize is there are a few places, quite a lot of places, it'll be hard to get even more than 50% occupancy.
Oh, wow.
And then on top of that is like average. I'm sure we can do more. And then the operational expenses are good for the small chap. I say small chap because like for a much bigger facility, like a multifamily style Airbnb, short-term rental will be different. But for a small chap, if you're completely hands off and you're outsourcing, then you're going to be paying 20-30%, whatever it is, to a separate company to manage it.
Mhm.
The operational costs go high. And I think you can still make money in those areas like you talked about, Vinny. But then I'm also seeing there are like really good areas here in the Washington state, like right by the ocean. And I was talking to one of the guys, and they had a $1.2 million property, and they're making like $80,000 on it. And I'm like, I was just kind of, I was like, your return. I was using that as an example to tell him that you'll be better off doing multifamily syndication as a passive investor.
No, you're
So,
right. You're right.
but
Yeah.
but that's the Airbnb, that's the big conundrum. And what I've been battling with in my mind is, if you think about it, the supply there is tremendously, they've made the platform, has made it incredibly simple for people to go put inventory up. And
Yeah.
before inventory goes up, competition rises up,
Yeah.
and the prices offered will have to go down.
Have to go down. Yeah. Supply
However,
and demand.
exactly. And however, the operational expense doesn't need to go down, right? From an Airbnb perspective. However, what's going to happen is, if your income that you're generating is slowly going down and your operational expense, say here, there will be a tipping
It can
point.
zero
There will be
money
a
then.
tipping point when slowly, one by one, people will realize, wait a second, I'm not really making any money. Then your inventory can go down. Then this might come up, and then, or this might go down. But I feel right now it's heading towards this.
Oh,
Is is
wow.
is
Wow.
how I
I would
see it.
say different
Yeah,
locations will be
yeah.
differently, I think. And not only that, like how you are buying it also is very important. If you buy already built $1.5 million home and try to do, or if you buy, again, if you can get a almost foreclosed home, good home in a good location, and then you're able to renovate it, and that way the whole cost will be lower, of course. And then you find, from what I understand, I think he pays 12% for the local management company to manage it. Percent, not 30. So which is, again, again, this is something that, again, new thing for me. I get excited. I like to know the ins and outs. I'm writing a white paper also on it, because why not? If this can really pivot and put that money with little bit down payment, where equity gain is going to happen if these foreclosure homes are coming. And there is like Cape, which homes is that? They have allocated billions of dollars for these foreclosed properties coming.
The other thing, Vinny, is on these foreclosed or properties that are in foreclosure, and you can take them over subject to the existing mortgage. If they
Yeah.
purchased in the past, let's say the past 7 years, they might have a mortgage that's 2%. So once again, if you look at that, and Daryl and I have talked about this many times, when you take over that 2.5% mortgage and the cash flow spread, forget Airbnb for a moment. If you have a payment of $1,500 a month, but the rent, that's the going rent, is, let's just say, $2,900 a month, the
Right.
amount of spread has never been so big as it is right now. Once you have not just foreclosures, but pre-foreclosures, I get calls every day, like from like people that I work with in my meetup group. Hey, Dave, I found a foreclosure. It's going to go to foreclosure in the month. In February, like February 15th, it's going to go to auction. The first question I ask is, what's the interest rate? What's the interest rate? And if it's 2 or 3%, I'm like, okay, let's pay 18 grand and let's make up all the back payments and attorney's fees, because even if there's not equity today, as long as we cash flow it, there'll be equity down the road, and we get it for basically 18 grand. You can take over these mortgages and you move them into a land trust. This is what's important. You don't move them into a
Glad you
corporation.
said that.
You move them into a land trust. and with the seller as the original beneficiary, so you don't trigger a due on sale clause, and then you reassign the beneficial interest, basically the person who's the beneficiary of the trust, to your company. So it's still protected by all the other aspects of a corporate veil, but you're not going to trigger a due on sale
from the lender perspective.
From the lender, yep.
You're right. I think maybe we should talk about land trust. I know I have shied from it. I know a little bit about it, but maybe we could do some really good research and kind of talk about it. Something that really can make a big difference. You're right.
Yeah.
I think Dave has brought up before. I know Dave has brought up before about the Airbnbs. It could be a great deal for an Airbnb, but you better look at the city and see what the city thinks. And are they shutting them down, right? Are they making it harder? Is it, yeah, if you're in a prime, you're in Colorado and you're on Tahoe, yeah, Airbnb all day long. But you're somewhere else where it's just a big city and somebody says, I want to put up an Airbnb. And then 2 months later, the city says, hey, by the way. So it's just another thought.
No, that's a good point. I think, again, it depends. Certain cities, even in Chicago, like he was saying, and I recorded it all, right? And it shows the city's name and all. He knew everything, what's happening around, because he's been looking at it for 2 years and doing 2 homes already. He did it last year, right? And they're doing quite well. But he knew this doesn't allow, this city is very prone. I said, what happened if they change the jurisdiction? He says they grandfather, and then after that, no permits are given. So that's another way to look at it. Just like in senior living also, when I went to Phoenix, went to Scottsdale, they have limit to how many beds you can make in a single family RAL, residential assisted living. So by knowing the parameters, one can navigate through. The other thing which I really want to talk about also today is franchising. How good it is to really get into franchises, where Bo and I are looking at right now. We bought the marina over there. We are thinking about buying golf course over there. Brother, I know, Dave, you had an investor who wanted to buy, but you walked away, and we also walked away. But they're asking 3.5 million only, but we want to see how far down they can go. And from our marina, it's only 15 minutes drive. We'll have 2 restaurants, one on this side, one on this. Now we are putting the pads, and we were thinking about 22 pads on the land that we bought. It's 37 pads now, and that's going to increase NOI. And then we have at least 13 acres, I think 13 acres still left, right at near to the water in this Wisconsin property we bought last year. So it's exciting to be open-minded, I guess is the word.
Vinny, on that Wisconsin property, see, I'm looking at another golf course in the Ozarks.
Yeah.
And when I say looking at, we're negotiating, and I think there's not a lot of people buying golf courses, because the issue at hand is, okay, for instance, a Wisconsin property. I talked to you about this. They go silent all winter.
Silent. It totally nothing over there.
If you can attract the snowmobilers in the winter, you can change. Like you talk about, you buy for 3. How do you increase your the profit on the deal? How do you increase the price? Increase the revenue. And so you have to appeal to a different clientele. Although in Wisconsin, the golfers are snowmobilers. They're the same people. And the other aspect is, if you have the land where they can park their shanties, ice shanties, they'll fish on your lake. So there are other sources of income, but you have to be smart. And most of these golf courses are like, no, we're a golf course. We're not letting shanties. I don't care if I'm a golf course or whatever. I care about income. I care about increasing NOI, right? There are so many opportunities in some of the states where you have this conversion from a golf course to basically snowland, and it's worthless 205 to depending on how many acres. The one we're looking at in the Ozarks is 290 acres for 3.9 million, 290 acres with hotels, restaurants, and it's $3.9 million. You can't buy a multifamily for that kind of money.
Yeah, not at all. Not at all. And there are possibly condominiums around the golf course too. You can sell memberships and all. That's a monthly kind of thing, revenue driven. Of course, if it's got restaurant and all, that's a good money maker along with, yeah. And then weddings. I just talked to somebody from Massachusetts, actually. I was invited to a very big elite club just a month back or so. And now they've been asking me to come back again. And so several people reached out, and this gentleman is buying a golf course. I said, what? We are also looking, and but he's looking over there nearby Massachusetts somewhere. But yeah, no, it's exciting to see how we could bring cash flows. I think that's the bottom line. Cash flows, how we can leverage real estate and business together to bring cash flow. So I wanted to share something today. I got an email Bo shared with me because I am into hotels he said right there, let me open it up, little Ankur. Oh, wow. Bo, where are you, brother? Let's see. 1 second. Right there. And I even looked at it, the email. Let me, yeah, go ahead. This is, another one. I did a big recording with another friend of mine from Ottawa. And I put some money in there. They made 37% for me. What? 37% on the money in just 7 months last year. And he shared with me his whole plan, how they buy good stocks and what their principles are and how they hedge with some options and calls and puts. I said, man, oh my gosh. Again, I'm just a sponge to see what's out there.
Hey,
I
Vinny,
apologize.
Do you have a piece of property for sale about 16 mil?
I don't have 16 mil. Oh, I'm selling the Knoxville one, which is already under assumption, loan
Okay.
assumption and everything. Yeah, no, 16 in Knoxville I am selling. But this is the one, by the way. Let's take a look at it. I thought this might be fun. It caught my attention. This boutique hotel will make 3.6 million day one. Rich Summers from San Diego, this boutique hotel will make 3.6 million in instant equity. I thought I'll bring it up and let's just see what is he talking about. Yeah.
That's all for this episode of The Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.